Welcome back. Now, several advanced economies are gearing up to roll out carbon border taxes, carbon border adjustment mechanisms aimed at discouraging carbon-heavy production have been criticized by the basic nations, namely Brazil, South Africa, India and China, as an unfair shifting of responsibilities from developed to developing countries. But Net Zero Tracker points out that the growing use of CBAMs presents both a serious challenge and real opportunity for South Africa. The organization's lead, John Lang, joins us now with greater perspective. John, thanks so much for your time today. Now, before we look into the impact, perhaps take us through what the carbon border adjustment mechanisms entail and how they're going to be enforced.
Yes, absolutely, and thanks for having me. The EU is bringing in their carbon border adjustment mechanism in 2026, and that will be followed by the UK CBAM. And basically, they are border tariffs that punish high carbon goods from certain industries to protect industries in the domestic market, so in the EU and the UK. And so there are growing risks for those countries like South Africa, like India, like some other countries that have a very high embodied carbon in the content of their manufactured goods that they export. And so what we did at the Net Zero Tracker is we looked at the intersection between trade and net zero and the growing collision between exports and climate policy.
And what industries in particular are being targeted, John? I mean, you talk about industries that are very energy intensive, particularly in the manufacturing sector. And I mean, here at home in South Africa, most of our energy is coal-based.
Yes, exactly. So that's the big risk here. And so that gives impetus to decarbonise the grid. So the sectors that we're talking about initially, so the EU scope is looking at iron and steel, aluminium, cement, fertiliser, and also electricity. But South African exports are caught in the crosshairs of that CBAM is mainly around basic metals that account for 32% of exports, and they emit 2 times more carbon than South Africa's closest competitors. So that brings competitiveness risks, job risks, and also frankly, economic risks.
And the EU and UK market's quite important for the South African economy. John, just talk to me about whether these taxes then consider the country's decarbonization efforts. We know that South Africa is actively pursuing that just energy transition, and that's also been backed by the likes of the EU and the UK.
Yeah, so it's not just in South Africa's interest to decarbonise, but it's in the developed, wealthy nations' interest to provide finance, capacity and technical support for South Africa to decarbonise. We know that climate change is a global coordination problem, and we need to decarbonise globally, not as individual countries. So it's in the strategic interests of the EU and the UK and other nations considering these carbon border tariffs to help South Africa to decarbonise. So it's vitally important that JETP, what you mentioned, the Just Energy Transition Partnership, is fully implemented by those countries that are still participating. Now, unfortunately, the US pulled out as a broader trend of them retreating from multilateralism. But it's vitally important that the countries that are still part of that Just Energy Transition Partnership step up.
And what does that do for sentiment then, John, when we see a leading economy like the US pull out from partnerships like this?
I mean, that signal has consequences. It really does. And it's incredibly short-sighted and myopic from the US administration. But partly because of that volatility with the US, there's a significant chunk of South Africa's exports that go to the US. It's even more important to focus on the EU and China, which account for 40% of exports. And we know that both those blocs or countries are decarbonising very quickly. Now, the EU is, you could argue, doing it for moral reasons. China is doing it for strategic and economic and geopolitical reasons, and also for energy security. Now, as South Africa's exports increase to those markets, the EU and China, it's vitally important that they have a medium-term to long-term aim, strategically and geographically pivot to those markets. But to do that, they need to have a serious policy for decarbonising their grid. So now there are some really good positive moves by South Africa. You have the integrated resource plan, and you've had recent energy reform. So that bodes hugely well. There's already 4 gigawatts of wind, I think, in the grid, with 53 gigawatts in the pipeline, and a target of 70 gigawatts out to 2050. Now that's gonna really help those decarbonisation efforts.
And with those decarbonisation efforts to fully implement, we do need to garner investment. How are we doing on that front, right? There is the JETP partnership in place, and we've seen, I think it was Germany at some point, also putting in some money to just advance some of our efforts.
Yeah, so those efforts need to continue, and they need to expand. One of the other threats here that I haven't spoken to is the fact that 300 plus multinational companies with operations in South Africa, and they account for $11 trillion in annual revenue. They have scope 3 net zero targets, which mean they want to decarbonise their supply chain. So actually, if South Africa is interested in foreign direct investment from private firms, as many countries are, and I'm sure South Africa is, then again, it's a further incentive to decarbonise that grid, so that those companies that are investing into South Africa can be sure that the carbon content of the goods that are produced there are beginning to become lower and lower over time. So actually, to incentivise not just public investment, but also private investment, it's hugely important that South Africa signals to the world that it is taking decarbonisation even more seriously. And there's a huge opportunity this year with South Africa due to submit its updated carbon cutting plan to the UN in September.
You know, at the end of the day, this really is trying to push through for faster efforts when it comes to decarbonization, John. So considering that, does South Africa and Brazil and India have leg to stand on as they try and pursue raising this issue at the WTO?
I mean, I do know that South Africa and India have talked about actually going to the WTO and raising a complaint under protectionism. I think that is potentially helpful to show the EU and other wealthy nations that they are deadly serious about this. So I think it is an important signal, but at the end of the day, there needs to be close diplomacy with those JETP partners, so the likes of the UK, France, the Netherlands, to show that, look, the implementation of this package of over $8 billion has been implemented too slowly, and that needs to be accelerated and actually even further. So we want that $8 billion to move up over 10 billion to actually deliver the decarbonised grid that South Africa deserves.
Hopefully some of these conversations will take place throughout the year as South Africa is hosting the G20 conference. John, thanks so much for your time and joining us today. That was John Lang, lead for Net Zero Tracker.